Welcome back to Small Caps, ladies and gentlemen. My name is Kerry Stevenson, and I've asked Andrew Munckton, the Managing Director of Kin Mining, to come back and give us an update as we head into 2023. The ASX code is very easy. It's Kin, K-I-N. Andrew has been with Kin Mining for some years now and been doing some, I guess there's consolidation in the area that Kin Mining is working in at the moment. They have had some recent assay results delivered. They're working on their Cardinia project. And from what I understand, the grade of this deposit is increasing. There's also a rights issue. So there's a lot to talk about today, as well as consolidation in the Leonora area. Andrew, great to see you. Welcome back to Small Caps.
Yes, good to be back after the Christmas break, Kerry. Good to see you as well. And thank you for the invitation.
Well, let's start off, Andrew. As I said, coming into December, you were expecting some assays to come back. As I speak to you, and before we get into that, the gold price, it's a great time to be chatting to you. The gold price is looking a lot stronger. What's your view on, as we head into 2023, gold? Do you think it's the year for gold?
Yes, I think the 2022 was a tough year for golds generally, and we saw the junior market and the producer market turn around in the sort of late September quarter, and that's essentially on the drive of gold to be this increasing store of wealth in a rising interest rate environment. And now you're seeing, the commentators, and these are the reliable, believable commentators, not the wild spruikers that you sometimes get on social media, but the reliable conservative commentators strongly suggesting that 2,000 US an ounce is imminent, and some are saying northwards of 2,000 US an ounce, and Aussie dollar exchange rate sub 70 cents, 69 cents last night. That suggests 2,900 or $3,000 an ounce is certainly within reach, which is a significant change from the 2,200 or 2,100 or 2,300 that we've had for the majority of the down point during 2022. So I'm very buoyed by what's happening on the macro environment. I think you've seen some of the producers react already, and that's typically what happens in turnaround stories and the beginnings of stronger gold price environments. The producers and the guys who can convert that to cash flow immediately benefit immediately. Those in the junior space and the developer space and the explorer space take a little bit longer, but I think you're starting to see that happen right now.
Yes, and you are very much in the exploration space. And one of the things I mentioned was some assay results that were coming back in the December quarter. Can you just share with our audience where you're at with those assays? What have they delivered so far, and what are you expecting?
Sure. It's worthwhile maybe mentioning a bit of the background. So Kin has 34 million tonnes at 1.3 in resource, 1.4 million ounces currently. And we are now sharpening our focus on the higher grade component of the Eastern Corridor, which is the area that we think has the best chance of one of these significant multi-million ounce discoveries. And focusing on the higher grade component of some of these structures that we have seen. And if viewers go back to our last announcements and I'll just read you the title of it, Kerry, from my screen here, the Diamond and RC results from Helens East and the Eastern Corridor on the 16th of January. So when those results came out, they were focused on the 5 and 10 gram zones of mineralisation that we have in that Eastern Corridor. And there are 3 or 4 deposits there that we, on a single structure called the Helens Rangoon Fault, that we think is a continuous structure over 3 kilometres.
Wow.
Now, those intersections have previously been 7 metres at 24, 7 metres at 8, 15 metres at 3.5, 8 metres at 6, 7 metres at 6. So it's got solid pedigree in terms of the discovery of a significant ore system here. Now, that's all on the one structure. And there are multiple structures like this in the Eastern Corridor, some of which have never had a drill hole. This one that we're working on has had 50 or 60 drill holes now. So it's a pretty consistent story. As I said, the results that we released in January were 2 at 24, 7 at 2.5, et cetera. The majority of the holes that we drilled all hit the structure. So we're reasonably confident that the structure is continuous, over 3 kilometres, the deepest holes down around 250 metres. So we know it goes at least 250 metres deep. A lot of the drilling is sub 100 metres vertical. So there's a sizable target here for us to go and explore with this next round of work. Results to date, we've only received the assays back for about half the drill holes. So there were 17 drill holes in the program. We've got 9 back. We've got another 8 in the assay lab that we're expecting in this next week or two. And once they come in, then I think we're in a situation that we want to go and tread on the accelerator with the exploration. If those 8 drill holes that we're still waiting on the assays come in with anything like what we've seen so far.
Were you surprised with the grade of what you're seeing, or had you done the work that you thought, yeah, this is where the higher grade gold's going to be?
Oh, no, we've done a fair bit of work on where the higher grade material is. It's pretty easy to run the query through the database and work out where all the 5+ gram intersections are, and they all sit on a single structure. So that was a bit of a eureka moment for some of our geos. But you're always never 100% confident. But when you drill the drill holes through it, you see the structure and you get the assays back and they all come in at +5 grams, then that's satisfying. So hopefully, fingers crossed, Kerry, there's never any guarantees in exploration, but we believe that we've found something that might turn into something pretty significant for us.
So is your focus for 2023 going to be on this Eastern Corridor? Because it's quite a big area that you've got. I guess what I'd like to paint the picture of is, where's the focus for 23? Where's, I guess, the value add for shareholders and those looking at Kin at the moment, do you think?
So we're convinced that this Eastern Corridor holds one of these large multi-million ounce deposits. All the geological indicators that we've seen so far tell us that's the place that it will be. I think what you'll see is we're a bit more strategic in the drilling, where we might have 5 or 6 targets, and we'll assess each of those targets with half a dozen to 15 drill holes each, and then be able to compare and contrast those targets internally and say, okay, this is the one, or these 2 are the 2 that warrant the next phase of work immediately. So I think that's what the exploration will tell us over this next 6 months or so. The back half of the year, if we find the indicators of one of those things, the back half of the year will be more focused on significant drilling programs to assess those kinds of deposits in detail. But we're very buoyant about our chances here in this next 12 months.
Do you think the market
in the Eastern Corridor?
Do you think the market recognises what you got your hands on the Eastern Corridor? Because I'll be blunt with you, the share price hasn't done a lot recently. Do you think that's the market not really recognising that you might have your hands on a multi-million ounce project here?
I think there's a combination of that. The market's been predicting that we're come a raise, which we have been. So the market won't re-rate you while you're come a raise, but we've put the capital raising details out a couple of days ago. So that will all close by the end of February, or in fact, 3rd week in February.
Well, let me just stop you there for a moment, just to put this into context. I'm speaking to you mid-January. It's a rights issue that you've announced to the market, which has been, I believe, underwritten by one of your major shareholders. If we can just go back a step, if you like, and the rationale behind doing it, the fact that Delphi Group have put their hand up, and why you've done it, and what the funds will, how much you're raising, and what the funds will be used for.
Okay, so we have, yes, the structure is a rights issue, 1 for 3 at 5.5 cents. So it's an attractive discount to the trading price prior to announcing of the rights issue, albeit that trading price had been knocked down by the market.
Mm-hmm.
So it's still done at an attractive price for all shareholders. So we're looking for strong participation from all shareholders. The Delphi Group, who own roughly 35% of us, have given us their letter of intent to subscribe fully for their rights. So they're, to a degree, the capital raise is underwritten because Delphi Group have given us that letter of comfort. So they're committed to $6.7 million worth of the $19.1 million that a 1 for 3 rights issue at 5.5 cents would raise. Now, we have a history of doing rights issues rather than placements. One, because it's fairer to all shareholders, and two, because the shareholders that we have, some are very substantial, and they want the opportunity to participate alongside all other shareholders in the growth of the company. So, major shareholders have expressed strong interest in it. We'll see where that gets to over this next period of time.
And my other question was, I'm assuming that the funds raised, that's rounded to 19 mil, is going to be used mainly on the Eastern Corridor for this potential uncovering of the multi-million ounce. It's early days, I know, but where's the focus?
Yes, the focus is on exploration in the Eastern Corridor for discovery and development of this, the high-grade component that we have strong indicators of at the moment. Now, whether that turns into a multi-million ounce discovery, well, the drill bit will tell us over the course of this year. And just as an aside, Kerry, while 1 for 3 rights in theory gives you a maximum of 19.1 million, typically rights issues have about a 60% take up. So you don't get 100% usually. And so we'll raise what we raise. Maybe that will be 9 million, maybe that will be 10 million, maybe that will be 11 million. And then placement of the shortfall is at the discretion of the directors on no worse terms than the rights issue terms.
Got it.
So later on, if we, let's say, ended up with 10 million and we had 9 million of shortfall, then that 9 million placement is at the discretion of the directors. We'll see where that gets to. But 9 or 10 million would certainly put us in good shape for this year.
I would hope so. I reckon that's plenty to keep you going. So are you drilling at the moment, or are you waiting for the rights issue to be finished, finalised, and then you're going to be doing your budget? I kind of want to understand where you're at right now.
So we're waiting on these 8 other drill holes to come in before we finalise the plans on the next phase of drilling. We'll probably wait until the rights issue is complete, but we'll be organising and making commitments to drilling contractors prior to that rights issue concluding. So that rights issue concludes 3rd week in February. We want to be in a position to make some commitments to drilling contractors early in February or late in January to get them back out on the ground literally as soon as the rights issue closes.
Hey, Andrew, what's it like over there at the moment now that we seem to have, the C word has gone away? Is it easy to get the drill rigs out there, easy to get workers? Is it starting to free itself up at the moment?
Oh, yes, it freed up the second half of last year. It still is labour constrained because while the fly-in, fly-out from internationally, and the fly-in, fly-out from the eastern states hasn't come back because people have gone off and got locally based jobs, and they're not about to drop a job to fly in, fly out to WA. So labour continues to be an issue. I have personal experience in this, in that I have some grown-up sons who are in the industry and are trying or getting jobs and getting multiple offers for jobs. So, it's pretty buoyant over here for geos and drill rigs and labour generally.
All right. Well, the area that you're in, I think it's pertinent for us to bring up the fact that there is consolidation going on in lots of areas at the moment, but specifically in the mining sector at the moment. There seems to be a bit of M&A going on. You're in the Leonora district in WA. There's a few companies out there now. St Barbara and Genesis are getting together, and I think the new name's called Hoover. Maybe it's called Hoover Resources. You know it better than I do. The question I've got for you is, where does Kin sit? You're in Leonora. There seems to be a lot of consolidation. Can you give us an update about how you're managing all that's going on around you?
Okay, so the consolidation in Leonora has been spoken about and in play, spoken about for a number of years. It's been in play for about 6 or 8 months now. The key players are Genesis, St Barbara, Red 5 with their new King of the Hills plant in the northern part of Leonora, Dacian and ourselves.
Mm-hmm.
Genesis have bid for Dacian. They're sitting at, in an off-market bid, they're sitting at about 78% ownership currently.
Wow.
Kin and Delphi have 10.6%, and other smaller retail shareholders have the remaining 11 to 12%. So that's getting closer and closer to completion. But Kin has a blocking stake, and the on the takeover by Dacian. The takeover by Genesis of Dacian.
Yep.
So we'll see how that plays out over this next period of time. The prize there is 2 million ounces at Mount Morgans plus the Mount Morgans 3 million tonne per annum processing plant. So that's what people are trying to find a pathway to completion on. Genesis, in the meantime, have agreed to merge with St Barbara, spin out, and it gets complicated, Kerry, so I'm sorry if it's difficult to follow.
I'm following you so far.
But they're spinning out a company called Phoenician, which is going to hold the St Barbara overseas assets of Simberi in PNG and their Atlantic operations in Canada, and a few other small bits and pieces that St Barbara own in Australia. But the Leonora assets, Gwalia, the Leonora exploration, the 5 or 6 million ounces of resources that St Barbara have in Leonora, will end up in this group, Hoover House, which is going to be owned by Genesis shareholders and St Barbara shareholders. Okay.
So St Barbara, the name won't exist anymore, but Phoenician will be the new name. That will own the offshore assets for St Barbara, but everything around Leonora will be absorbed into this new name, Hoover House, which is the takeover of Genesis of St Barbara. Is that it? I get it?
It's not really the takeover, but the assets of Genesis in Leonora and the assets of St Barbara in Leonora will go into Hoover House.
Okay.
And the non-Leonora assets of St Barbara will go into Phoenician.
Got it. My question to you, Mr. Munckton, is that little blocking stake, tell me why, or tell us why you've done it. Tell us, I guess, the strategy, the thinking behind it, and why that's going to be good for shareholders in the long run.
Okay, two things. We like the assets that Dacian have in terms of the processing plant in particular, and the 2 million ounces of gold that they have there. So that we've liked those. We've had some discussions with Dacian prior to their being taken over or being tried to be taken over by Genesis. So that's the number one thing. The second thing is that we think that the Genesis bid was opportunistic and at a time when Dacian were at a pretty cheap price, basically.
Okay.
So we thought it was a good investment to take some ownership of that. Now, how that will play out ultimately, Kerry, I can't tell you, but we're flexible about how that plays out. But we think fundamentally there's good value, and there's good value in holding that Dacian 10% stake until we get the offer that is attractive enough for kin shareholders to divest ourselves of that stake.
Got it. Okay. So you potentially could divest of the stake in Dacian, but continue to have the kin assets and continue to grow and develop from your current 1.4 million ounces to 2 million ounces, but focusing on the Eastern Corridor.
Yes, and maybe there's a good match-up between our Cardinia 1.4 million ounces and the Mount Morgans mill.
Yeah.
Or maybe there's better value for kin shareholders in divesting ourselves of that stake at some point in time. Maybe that stake might be divested to Genesis, which would allow them to complete the Dacian acquisition. Maybe not. We'll see where that plays out. That bid by Genesis for Dacian is still live, and they'll need to close that at some point in time.
You're the fly in the ointment, Mr. Munckton. They're sitting there going, what the heck? You must be at that. I'm sure you all get around and say kumbaya at some point, but must be, it's an interesting time over there. All right, let's go back to kin mining, and let's go back to, your current market cap is about 66 million, I believe. Talk to us about value and how you see that playing out for kin in 2023.
Okay, so there's, as you mentioned, we've got a market cap of about 66 million. That gives us an enterprise value of about 60. And we're sitting on 1.4 million ounces. So those ounces are being valued by the market about $40 an ounce. So that's a pretty low number for those grade ounces in that location.
Okay.
6 months ago, because there are 3 mills within 75 kilometres of us, and we've got 1.4 million ounces. We've got approved mining projects ready to go. So we can be on the ground and producing gold within a few months with the right deal, with the right mill. At $40 an ounce, so we should be valued significantly higher than $40 a resource ounce.
Yeah.
6 months ago, resource ounces at our grade in those kinds of situations were trading for about $100 an ounce. So there's an argument to say that and there were several purchases by players in our region, St Barbara being one, Dacian being another, who paid very close to $100 an ounce in one situation and well over $100 an ounce in another situation. So this isn't some theoretical transaction here. These were real live transactions, and that's the prices that were paid per resource ounce for very similar grade to our own. So my view is that we're at very, very low prices, very attractive prices now, and shareholders should really look long and hard at making an investment in our company to support the ongoing growth of the resource, knowing that there's a pretty strong consolidation going on, and we have, by buying this Dacian stake, we have bought ourselves a seat at the table in that consolidation.
When you say you bought yourself a seat at the table, Andrew, what does that mean?
We've had discussions with all of the players in that region, the St Barbaras, the Dacians, the Genesis, the Red Fives, over an extended period of time. But ultimately, you need to have assets that other players are prepared to pay full and fair value for.
Yeah.
And we think that Dacian stake, in combination with our 1.4 million ounces at Cardinia, are good assets that people will want to negotiate fair and reasonable prices for.
Let me play devil's advocate for a moment, and let's just say that there's consolidation going on over here, Kin sitting here, and then they're not going to play ball for whatever reason. Strategy going forward for Kin, again, I go back to getting value into the company. If, let's put the Dacian stake to one side and just focus on Kin. What's your strategy going forward to give that value to shareholders in 23?
Explore for higher grade, higher margin ounces.
Okay.
Add them to the inventory, and you can either go alone. If you make a significant discovery, you can go alone with your own processing plant, or you can cooperate with the owners of the various processing plants in the region. So that there's a monetisation endpoint to this strategy that is being enacted in 2023, which is, let's get some high grade material in the inventory that we can point to and say, okay, well, this stuff is where the big margins are on a rising gold price environment.
Yeah, and it is a rising gold price environment, just saying quietly, ladies and gentlemen. So you mentioned production, one of my favourite words. If all things went according to plan, when does Andrew Munckton think that there might be some revenue, some production out of the Kin mining stable?
That's a very good question, Kerry, and one that I can't really give you a definitive date on.
Damn.
Because we require access to third-party owned processing plants at this point in time. So
but there's more than one around the area, isn't there?
Yeah, there's three. Our first project is fully approved. So if we're able to secure access to one of those processing plants at commercial arrangements, then within 3 or 4 months of that, we can have ore sitting on the ROM and going through one of those processing plants. So we're ready to go, but we require the right deal from the right party.
Kin's been around for a little while. Andrew, would you say that 2023 is going to be a pivotal time for Kin mining? Do you see this as like, now we're getting to the pointy end?
Yeah, I think that the consolidation's underway and that will play out over 2023. We need to be there with our best foot forward.
All righty. Well, we're running out of time, Andrew. Just quickly, can you give us 3 reasons why you think people should be sitting up straight in their chair and taking a lot more notice of Kin mining as we move into 23? I threw this at him, ladies and gentlemen. Didn't give him any time to think.
Yeah, the 3 that we've spoken about. The consolidation's underway and we're a party to it. We've got to focus on some higher grade, well-advanced exploration in our region that we own 100%. And thirdly, gold's going to be a pivotal year for gold, I think. So gold, as opposed to some of the other things that people have been focusing on over 2021 and 2022, I think 2023 is the year for gold.
I tend to agree with you, Andrew Munckton, Managing Director of Kin Mining. What a year I think you've got ahead of you. Good luck with the rights issue. Fabulous that it is underpinned by Delphi Group. And I can see you're going to be a busy man. Come back as soon as you've got some more news and we'll have another catch-up chat. But for now, thanks for joining me on Small Caps today.
Thanks, Kerry.